Coming up on Market to Market. Wall Street begins 2012 with a rally, but a key study reveals a slowing economy on Main Street. The frontrunner wins the caucus while the rural vote bolsters an underdog's bid for the White House. And the Nebraska hog producer powers his operation and his neighbors by converting waste into watts. Those stories and market analysis with Jamie Kohaki next.
Funding for Market to Market is provided by Pioneer Hybrid, which supports efforts to help families pass their farms into the hands of the next generation. Pioneer, science with service, delivering success.
This is the Friday, January 6th edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mark Pearson. A surge in hiring last month pushed America's unemployment rate to its lowest level in nearly 3 years. According to the Labor Department, employers added 200,000 positions to their payrolls in December. The national unemployment rate, meanwhile, declined 2 points to 8.5%. That's its best showing since February of 2009. The private sector powered all of the job gains as a wide range of industries expanded their payrolls. Both the manufacturing sector and the healthcare industry added 23,000 jobs. Transportation and warehousing added 50,000 workers, and even the beleaguered construction industry added 17,000. All told, U.S. employers added 1.6 million workers in 2011. That's up 70% from 2010 and would have seemed like nirvana in 2009 when America lost more than 5 million positions. Rural America typically lags well behind the broader economy during recoveries. This time, however, things are different. Producers enjoyed record or near record commodity prices, land values, and net farm income at some point in 2011. But the outlook for 2012 is anything but certain. This week, a key barometer of the Main Street economy revealed a rough spot. Finding the connection between the European debt crisis, the dollar, and the price of farm commodities may seem like a stretch, but one rural economist is connecting the dots.
Got a little story. We got a Spaniard and an Italian and a Greek go into a British pub, and who pays the tab? Well, who pays the tab? The American. The American. In other words, right now the Federal Reserve has told us that they're going to provide liquidity for these nations so that there is no, I won't say no default, but certainly to provide any liquidity that's necessary to keep the dominoes from falling.
Ernie Goss is an economics professor at Creighton University who surveys business owners in 9 Midwestern states that rely heavily on agriculture. His data indicate the European debt crisis will continue to be a significant risk factor for farm states. Goss expects financial promises by the Fed, the International Monetary Fund, and the European Central Bank to prop up Eurozone countries will have a bearish effect on agricultural commodity prices.
What I expect it to do is boost the value of the dollar. What it's going to mean is agricultural commodity prices are not going to be that good for the first half of 2012. Energy commodity prices not that good for first half of 2012, which is a problem for North Dakota and Oklahoma in terms of energy, but it's a problem for the rest of the region in terms of agricultural commodity prices. So the real key, one of the risk factors, is what's going on in Europe.
Goss expects the Midwestern states he surveyed to have slow or even no economic growth over the next 6 months based on data collected for his Business Conditions Index.
So what we're looking at for the first half of 2012 is a slow-growing economy. And I think there are a lot of reports I'm seeing are getting way ahead of what's actually going on. I hear this really somewhat enthusiastic consumer responses, and I think the numbers aren't quite as strong, certainly our numbers, but we're looking at slow growth in the first half of 2012.
While Goss predicts the pace of rural economic growth will slow in the months ahead, he believes the outlook for the country as a whole is positive.
The U.S. economy is apt to grow a bit faster in the first half of 2012. So the gap between the two is going to close, meaning the Mid-America region, the 9-state region, growth is going to come down a bit, and the growth in the U.S. is going to go up a bit.
While Goss expects the loss of the 45-cent per gallon ethanol tax credit to have a small impact on rural America, he does see the need for clear and concise U.S. policy.
We need a 5-year energy plan and that 5-year energy program, which can help solidify and assist some of the alternative energy companies. We're not seeing that. How can you plan? We've just seen, for example, a 2-month extension of the payroll tax cut. 2 months. Now, how on earth can businesses plan when you give them a 2-month horizon? We've got to have more sanity coming out of Washington in terms of looking ahead.
Friday's Labor Department report was the first to be released since Republicans began the official voting process to determine a candidate to face President Obama this fall. Obama appears destined to face voters with the highest unemployment rate of any president running for re-election since World War II. And that prospect was not lost on the cadre of candidates which invaded the heartland this week to ring in the new year and take the first steps on the long and arduous road to November, the Iowa caucuses.
12 for Romney.
Lured by the first official votes of the presidential campaign, a steady stream of Republican candidates focused their attention on the predominantly rural state of Iowa. Accompanied by throngs of national and international media, presidential hopefuls dropped by small-town cafes, high school gymnasiums, and Fortune 500 auditoriums, delivering smiles and handshakes to as many Iowans as possible.
Larry, thank you very much. It's an honor to be here with you today. I just want to say thanks.
Iowa is the world's leader in production of several agricultural commodities, but it also has a reputation for launching underdog presidential campaigns. In 1976, a relatively unknown peanut farmer, Jimmy Carter, used the Iowa caucus as a springboard to the White House. Despite an electorate that is more than 95% Caucasian, Iowa chose Barack Obama last time around.
Game on.
This year's out-of-nowhere story was Rick Santorum. The former Pennsylvania senator traveled to all of the Hawkeye State's 99 counties on a shoestring budget, parlaying the effort into runner-up status and the closest finish in Iowa caucus history.
Because the message I shared with you tonight is not an Iowa message or an Iowa and South Carolina message. It is a message that will resonate across this land. It will resonate, I know, in New Hampshire.
Riding a late surge in the polls, Santorum carried most of Iowa's rural counties and came within 8 votes of victory. The race was so close, most political pundits considered the performance a win.
We also feel it's been a great victory for us here.
By winning most of Iowa's urban areas, former Massachusetts Governor Mitt Romney captured first place in Tuesday's caucus, solidifying his front-runner status.
I think it's great that here in the heartland of America that a campaign begins. All 3 of us will be campaigning very hard to make sure that we restore the heart and soul of the entire nation. And thank you, Iowa, for the great send-off you're giving to us and to the others in this campaign. Look, this is a campaign night where America wins. We're going to change the White House and get America back on track.
The Army Corps of Engineers announced this week that electric power generated by Missouri River dams last year was above average for the first time in a dozen years. Prior to 2011, nearly a decade of drought cut hydroelectric generation at the Corps' 6 dams in the Dakotas, Montana, and Nebraska, forcing the federal government to spend more than $1.5 billion since 2000 buying power elsewhere to fulfill contracts. Corps officials acknowledged increased power offers little to ease the hardships endured by thousands of citizens affected by record flooding on the Missouri last year. But increased energy production is a welcome development for just about everyone else, including one farmer in Nebraska who has found a way to generate his own electricity and enough for his neighbors while reducing emissions of a key greenhouse gas. Harvest Public Media's Perry Stoner explains how the innovative operation converts waste into watts.
Danny Cluthy runs a family hog operation in rural Dodge, Nebraska. Step inside one of the barns and you'll see and hear it's like many hog operations in the state.
You know, my job is to get them little pigs fat and get them to market.
The little pigs weigh 12 pounds or so when they come to Cluthy's facility. 5 or 6 months later, he's cared for them enough they are ready to go to market, weighing 20 times more than when they arrived.
These hogs are treated better than humans. I mean, their diet is to a T for their age. Fresh water, fresh air. They sleep with a grin on their face.
With about 7,500 hogs typically on hand, a lot goes into fattening them up. That means there's a lot that comes out of them, too. It's manure, and that's where Cluthy's operation becomes unlike any other in the state. The waste of hogs and other farm animals create high levels of the greenhouse gas methane. Methane can last more than a decade in the atmosphere and is 20 times more powerful than carbon dioxide as a contributor to climate warming. But Cluthy is taking steps to make his farm an environmental game changer.
What I really call this thing is a manure processing system with a byproduct being electricity.
Hogs create an average of more than a gallon of manure each day. All told, Cluthy's hogs generate over 9,000 gallons, enough to fill a gas tanker every day of the year. Down the hill from the hog barns is a pit. An underground pipe system uses gravity so the manure flows downhill. Manure collected in a pit is common at hog operations, but what happens in this pit is not. This 14-foot deep airtight tank is called a methane digester. There are about 150 of them on farms in the United States, but Cluthy's is the only one in Nebraska.
The raw manure goes down to the digester where we've got bacteria, lots of bacteria. And what the bacteria does is actually breaks the manure down and it comes out liquid. Every day I feed about a quarter of a pit to the digester, and every day the hogs replace it. That is renewable.
The digester is heated to about 100 degrees. That's ideal for the bacteria to break down the manure and release methane gas, a process that takes about 3 weeks. The pit traps the methane in its oxygen-free environment. Cluthy then uses the methane as a fuel to run farm utilities.
The methane gas gets sucked up here to the 3306 Cat engine that's running a generator. It runs 24 hours a day, 7 days a week. I always say this Cat engine just purrs on this methane.
The Caterpillar engine sits in its own small building. Designed to use either methane or propane as fuel, the engine produces electricity and it's put on the electrical grid, completing the manure to electricity process. Cluthy started dreaming of this facility in 2003, but wasn't producing electricity until more than 2 years later, due mostly to the permitting process. Nebraska Public Power now buys the energy from Cluthy's family energy company. But generating electricity from hog manure isn't financially what it could be. Customer generators in Nebraska, like Cluthy, can produce up to 25 kilowatts. Above that amount, they are paid what's called avoided cost from the utility. In simple terms, he's paid the utility's wholesale cost of electricity. The 25 kilowatts allowed in Nebraska is among the lowest in the nation. In the end, the break-even point for Cluthy's system is at least 15 years.
We actually make enough electricity here to take care of about 45 to 50 homes a year. I would use about 20% of the production and sell 80%. For a byproduct, we actually got a lot of electricity here. Anybody in Cumming County that turns their lights on doesn't know the difference whether it's coming from Cooper Nuclear or Olean Energy.
They're creating greenhouse gases, actually creating a very potent greenhouse gas, so you don't want that to escape. And so it's really important to capture as much of that methane as you can.
For biological systems engineers like Rick Stoll and Crystal Powers, finding ways to utilize what might otherwise be waste is a scientific process that helps make agriculture more sustainable.
In each step of the process, from growing your forages and grains for your livestock to feeding the animal to within the manure, how do we capture as much energy in each step? And anaerobic digesters fit in there because we're figuring out how to get more energy out of that manure before it's ultimately used as fertilizer.
Livestock manure is used as fertilizer for crop agriculture. Methane-free manure is too, and Cluthy says it's odorless. Livestock waste odor is found offensive by some, and it is occasionally the grounds for lawsuits. Ryan McGee is with the USDA's Agricultural Research Service. In the lab, he's examining what happens to the manure in the different stages of Cluthy's process.
So these samples are from the pit, which are essentially green raw manure, very little treatment. Then the next step is after it's been digested through the anaerobic digester, which is a basic flow of treatment at the Cluthy site.
We're asking them to look at solids content, the organic matter, how that's breaking down. That would tell us how well the digester is performing. And then we're also very interested in what's the likelihood of gases coming off that would cause odors. And the assumption is that the digester is going to break down those and reduce the likelihood of odorous gases and other undesired gases coming off.
Livestock production can have another serious negative environmental impact: water contamination.
85% of our population in Nebraska relies on groundwater for drinking water. If waste gets into water, it's likely to cause a problem. I mean, that's the whole purpose of our livestock permitting program, is to keep livestock waste out of the waters of the state, the groundwater, the streams, the rivers, and the lakes and the reservoirs.
Marty Link is Water Quality Associate Director with the Nebraska Department of Environmental Quality. She says harm to drinking water isn't the only concern if livestock waste gets in the water.
When it runs off into a stream, it can cause the algae to get all excited, and it gets all this nutrients, and it starts growing a lot. And so there's an algae bloom. The algae bloom takes up a lot of oxygen. Oxygen is all depleted then from the water, and the fish won't have the oxygen in order to breathe, and they may die. That's a worst case scenario. Accidents happen, but well-managed waste should not make it into the stream.
You know, now all of the effluent that goes down the lagoon is odorless. So really, it's just kind of nice, pretty lake out there.
At Danny Cluthy's hog operation, he can still use the manure waste as fertilizer after capturing the methane to be a fuel source. He likes that the digester helps him be a good neighbor.
We've got a track record, and now we've got something that, you know, other producers can come and look at and say, wow.
It's a costly endeavor Cluthy could only make happen with grants that totaled hundreds of thousands of dollars. That's one of the barriers in front of more livestock producers wanting to do what Cluthy has, but he's not done. Another grant will provide about 1/4 of the funding to install a scrubber that will remove methane impurities and leave propane. He estimates the additional use of the manure byproduct could eliminate his annual energy costs of $30,000.
And I'm excited about the fact that we'll be able to heat our barns, dry our corn, whatever we use propane for now, we're going to be using methane. And will this solve our oil crisis? Probably not, but it's a piece of the puzzle.
For Market to Market, I'm Perry Stoner.
Next, the Market to Market Report.
Grain prices trended lower this week as the trade pondered the impact of a strengthening dollar. For the week, March wheat lost 28 cents, while the March corn contract moved 3 cents lower. Soybeans also lost ground. The March contract gave back 11 cents. The nearby meal contract declined $1.30 per ton. Cotton prices nearly matched last week's move with a gain of more than $4 per hundred. And in the dairy market, February Class 3 milk futures were up 15 cents. The March contract moved more than 30 cents higher. In livestock, February fed cattle lost $1.13, feeder cattle advanced nearly $1.75, and the February lean hog contract moved 50 cents lower. In the currency markets, the euro declined another 240 basis points against the dollar. Crude oil rallied $2.73 per barrel. COMEX gold advanced $50 per ounce, and the Goldman Sachs Commodity Index gained more than 15 points to settle at 663.5. And here to lend us his insight on these and other trends with regular market analyst Jamie Kowalki. Well, Jamie, some big moves, big moves in crude oil. A lot of concern about what's happening in Iran. Gold coming back up again. It looks like it's kind of a risk-on environment again for the commodities.
That is right. A lot of uncertainty again overseas. We saw Iran doing some saber rattling again this week, and that pushed gold up about a $2 to $3 rally earlier this week. We're back north of 100 in the nearby crude contract. Supplies are up, demand is down. These prices fundamentally aren't justified right now, but there's a lot of risk premium, like you're saying, in these markets right now. What I've been doing is spreading crude with options, selling deep out of the money calls, 115 strike, and selling like some $82 March puts, and just thinking crude will stay between those numbers. But right now, at $101, $102 crude, fundamentally it's not justified.
Well, and of course, the strengthening dollar is also playing a role. Where do you see the dollar headed?
I think the dollar is supportive right now. What do you know? Greece back in the news this week. It's been a month or so since we've heard Greece, and they're back.
What a joy it's been.
Exactly. Italian banks back in the news. Euro tanked, dollar rallied off that. I think if you're a currency trader, you stay long the dollar as long as you stay above 80. You stay short the euro as long as you're below 130. And I think that's a longer term trade that is going to be a winner.
All right. Well, one of our viewers from Canada was wondering about the impact of the dollar and putting a lid on commodity prices. What's your thought on that?
I think it's a trend to watch. I think it's very, very likely that it could happen where the dollar creeps back to 83, 84, the euro down to 124, 125, and that keeps a lot of the fund money sidelined.
Yeah, and that fund money can help us out some. Let's talk specifics. Let's talk about the wheat market, what you see happening there. I was down in Texas. I was looking at some of the wheat crop, not looking good. There's been no break in the drought really down there to any great extent. So the U.S. wheat crop and the main grain belts looks pretty tough.
Right. There's no snow coverage either in the hard red winter wheat. Like you're saying, the drought from roughly Wichita clear up to Minneapolis, stretching through there. Wheat right now is a follower of corn. It doesn't have much going for it at all right now. Exports are slow. We're still losing business coming out of the Baltic Sea area. For the report coming up this coming Thursday, I'm looking for the numbers to be a little bit supportive and looking to see more short covering. But I think short term, still solid rallies in wheat. March up around 6.5 is where I like to be short at.
All right, yeah, the USDA report's coming out on Thursday. It'll be the final look at 2011, and we'll kind of see where we're headed as we go into 2012 in terms of carryout. Globally, plenty of wheat.
That's right. That's been the overhanging bearishness the last 3 to 6 months. Is this European wheat, the Russian wheat, especially, is what has put a crimp on our exports.
All right, but kind of bracket me in. What do you see wheat and basis Chicago contracts? What do you see?
I see the basis widening out. It already has started widening out there. I think fundamentally prices should move lower. I would sell a higher opening next Thursday if we get a bullish report. We are going to get some supportive numbers, longer term off acreage, but I think until exports pick up, and the wild card there is still a dollar, like you're talking about. Until the dollar, I think, gets back below 80, you have to keep selling rallies in wheat right now.
All right, so your target will be about what on wheat?
650. I want to be short March Chicago.
All right, let's talk about the corn market, which, like say, is the leader. What do you see now for corn as we go forward? Obviously, that report Thursday is going to be critical.
Right. The number I'm looking at Thursday as the most pivotal one is the carryout. I've got my numbers about 735, 740 area. That's supportive. The trade, too, is looking for supportive corn numbers coming in Thursday. Crop size around 12.35 area, and hopefully we can get a bounce off of that. But really what the market has been trading off of on this 80-cent rally that we have seen is Argentina. Serious drought. 4 out of the last 5 years they've been in a drought. 2008 was the worst one. I don't think this one right now is as bad. It's closer to 07, 010 drought, but there's already private estimates showing a cut of roughly 2 to 4 million metric tons lower than what was expected off their bumper crop 2 months ago.
All right. Now, they've had a little bit of rain. There's a little bit of rain in the forecast, but they've had that high heat is, I think, the bigger concern, hasn't it?
Yeah, they've been over 100 mark several times the last 2 weeks, and this coverage for Monday that the market backed off on Thursday is only roughly about 70%, and one rain right now is not going to be turning the crop around overnight. The key point to watching corn right now is 665 March. Sell against that before the report. If you bust through it, you're going to run to 680 probably and sell into it there. For new crop December, I like 603 and then 615 if I get a bullish report and run up into that area at more stiffer resistance.
And the bullishness you think is going to have to be a carry out in that 730 to 740 million.
Yeah, there range, right? or lower, and also too keeping the weather bullish down in Argentina.
Yeah, we'll see how that plays out. Of course, soybeans will be impacted by that eventually. The beans aren't impacted that much by the weather at this point for the late planted beans in South America. What's going to drive the soybean market?
Same thing, dryness down in Argentina, roughly a 4 million metric ton cut there already right now is what's being forecasted. Brazil's okay. There is northern part of the country that's a little too wet, but nothing serious. It's all Argentina there as well. I'm not bullish beans right now, neutral to negative. I would sell into this rally. If we get one Thursday, I'd even let some physical beans go early next week on a rally. I don't trust this market right now. Looking for the carryout number to be bearish, somewhere up around like 235, 238 is where I'm expecting USDA to be at.
Weather rallies can be cruel, and so those are your price targets in for soybeans.
I like 1240 March and 1260. If we can somehow get up into there early next week, I would sell into it. Let some more physical old crop beans go early next week.
All right. So with that, let's talk livestock. Fed cattle market, as we've kind of seen kind of some sluggishness on the cash trade. We came back under 200 on some of the car lot trade in the Midwest. What's your take going forward?
I'm neutral to negative beans here, or I'm sorry, cattle here short term as well. Like you're saying, the cash is kind of stalled out. Had some scattered trade here Friday at 121, but nothing really widespread and heavy. We got large current on feed supplies. Domestic demand is still the wild card in this market right now, and until it picks up, I think you saw rallies. I like August up around 127, 127 and a half being short there. And I think a key too to watch out here in this whole meat complex, pork and beef, is fuel prices. You've seen a big jump there, and I think fuel prices are going to continue to go up short term. And I think you saw rallies here right now in the cattle market.
All right, and in the hog market, what do you see?
Same thing there as well. Neutral right now. We need to see a big kill number tomorrow. Watch the cutouts for a bounce to see demand pick up. The big key in the pork market is a seasonal bottom in place, and I think more than likely we have. I've been selling deep out of the money puts in June and July, like $82 and $84 strike puts.
Okay, so maybe use options, maybe a way to reduce a little bit of the risk here.
Yeah, I'd be at options in the hog market. I'd be the futures and the cattle. Sell March feeders next week. That's my trade of the week next week. A big seasonal to get short there, and watch the April, June bull spreads, bull live cattle spreads.
All right, Jamie, as usual, we appreciate your insights and thank you for being with us. But that will wrap up this edition of Market to Market. If you'd like more information from Jamie on where these markets just may be headed, why not visit the Market Plus page? It's at our website. You'll find expanded market analysis, audio podcasts, streaming video of our program, and links to our Twitter feed and Facebook page. And by the way, it's all free at the Market to Market website. And of course, join us again next week when we'll examine the market impact of USDA's latest estimates on global supply and demand. So until then, thanks for watching. I'm Mark Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content.
Funding for Market to Market is provided by Pioneer Hybrid, which supports efforts to help families pass their farms into the hands of the next generation. Pioneer, science with service, delivering success.